Welcome to Retire Rich, Tales of Financial Freedom with Mark Hernandez and Carlos Lopez from M.A.H. Financial. In this podcast, we guide professionals of all generations, including Gen X, Millennials, and Baby Boomers, to answer an array of questions ranging from building wealth in 401k plans to selecting life insurance policies, including questions about IRAs, dividends, and bond alternatives. So tune in as South Texas's own financial advisors and fiduciaries, Mark and Carlos, draw from years of expertise, interview clients, and share stories of financial wisdom to accelerate your path to achieving your financial goals. Now, on to the show.
Hello, I'm here with Carlos Lopez.
Hello.
Yes, and we've got Steve Lovin on the line. We're going to be talking about Kaizen. Carlos, you want to say what's going on here?
Yes, this is Carlos Lopez. I'm a financial advisor with M.A.H. Financials. We have a guest today, Steve Loving from InsureMark Simplicity, and I wanted him, Steve, why don't you introduce yourself?
Thank you, Carlos. Yes, thanks for having me today. Yes, my name is Steve Loving, and I am an advisor development consultant for Simplicity InsureMark. I've been in the life insurance business for over 30 years, first as a producer and now working with advisors like Carlos, finding solutions for them for their life insurance and asset-based long-term care and disability insurance.
Excellent. And how long, you've been in the business for a long time, but how have you seen the industry or life insurance, how has it evolved since you started to now?
Well, it really has evolved quite a bit, Carlos. Initially, there were just standard types of coverage out there, whether that be term insurance, universal life, and whole life. And now there's a whole assortment of different types of coverage. Since then, it's really evolved a lot into the index universal life and index products. And so we found those to be very beneficial. And today, that's kind of what we'd be discussing with Kaizen, because they do utilize index universal life contracts for this type of concept.
What is the difference between a IUL, index universal life insurance policy, a term policy, and a whole life policy?
Term insurance is just pure protection. If you had a mortgage for 30 years and you wanted to make sure that that mortgage would be paid off, you would just pay a flat premium for 30 years and having a level death benefit for that term of 30 years. At the end of 30 years, or 10, it could be 10 or 20, you would experience increasing premium costs each and every year. So term insurance is a great solution, but it's not a long-term solution for life insurance needs. There is whole life insurance, and that is more dividend-based, and so dividends are determined by the company, and mutual companies pay dividends each and every year, and so that dividend is kind of out of your, what would you say? You don't have a lot of control over the policy. They are very good contracts, but with an indexed universal life contract, you can have some participation in the market, and that could be something similar to an S&P 500 indice. And with the indexed universal life, there is a 0% floor. So if the market is less than zero, your assets are not losing any money inside that contract each year, but then you have an upside growth potential as well.
We'll see that in a couple of minutes. We're going to go over the Kaizen program, the program that's the crux or the main part of this whole podcast today. Now, the cash accumulation in this index universal life insurance policy grows tax favorable, correct?
Yes, it does. It grows tax deferred, and then you can access monies out of the contract on a tax-free basis. That is one nice thing about life insurance that's pretty unique to that product set.
So what would be the difference between... I'm sorry, go ahead.
No, I was just going to say, you can use tax-free money coming out of the policy for really anything. There's no penalty prior to age 59 and a half. And so if you needed it to buy a new home or fund a college education or supplement your retirement savings, you can pull money out of life insurance on a tax-free basis.
Excellent. And what is the difference between an IUL and Kaizen? What separates it?
Well, actually, I don't know if there's a lot of separation. Kaizen is a platform that uses leverage, and it also has an index universal life or an IUL policy that's being used for the concept of Kaizen. And so it's a unique way that's been designed for the advantage of leverage with cash accumulation features. Again, potential for policy distributions to supplement income.
Okay. So let's get into let's dive into an example of that, if you may.
Sure.
Okay, so let's go to the example here. I'm going to use our counterpart here, David Saldivar. He's 42 years old.
Yes, Steve. Just everything you just said just went. I'm completely new to IULs. I do understand the market, but as Carlos was trying to explain to me earlier before, I just told him, hey, just explain to me like I know nothing. So I just asked him just real quick, like if we met in an elevator and you gave me a pitch, like what is it? What is it about? Because I start hearing, big terms, I get lost. I think everybody else, that's listening to this may get lost. So I just wanted to, ask Carlos, hey, like, what is it? Like, what is it really? Like, what is it going to do? What is it going to get out of me? What am I putting into it? What am I getting out? That's just the big thing. And I think he summed it up pretty well when I asked him about that. And what was that?
You can have a tax favorable cash accumulation for your future to supplement your retirement. So what we're going to do now is we're going to go to the actual Kaizen platform to see visually how that would look for David, who is 42 years old right now. So David.
So it's like a life insurance I'm paying into.
Yes.
But it's not like I have to die to get it.
Well,
That's correct.
Okay.
That's correct.
Okay, all right.
That's
so I
correct.
can touch it before I die. That sounds great.
It really is. And if Carlos is he showing you the estimate of his
benefits? He's going to plug
perfect.
in my age. Nobody look at that because I'm getting older.
So we have David here at 42 years of age, a young person still, male, and then the contribution we had decided on is $24,000. So $24,000 of premium per year, and as I calculate this amount of premium, the contributions are matched by a lender or lenders in the Kaizen program for a period of the first 5 years, where David is matched. The 24,000.
Okay. What are we looking at here? I see a bunch of little piggies.
So the first piggy is your contribution. You're the orange piggy, and the lenders are the green ones.
Okay, so that's what I'm inputting, and I see that my piggies only go so far.
Yes, for the years 1, 2, 3, 4, and 5, the lenders match your 24,000. But after the 5th year, you're completely done.
So I'm getting matched.
You're getting matched.
So
Correct.
I'm putting in for 5 years, and they're putting in for 5 years. So that's double.
Double, yes.
Yeah. And
That's
then
the
after the 5th year, what happens?
you're done.
I don't have to pay
in
anything.
years 6 through, that's correct. Your payments end after 5 years, and in years 6 through 10, the lender is still making contributions on your behalf.
Exactly. Here you have the arrows. You have the two green piggies, which are the lenders, as Steve says. And after the 15th year, the loan is repaid and the money is available to the client or to you. Typically around the 15th year, the loan is paid back. So as I scroll down here, you'll see that you would have contributed in 5 years about $120,000. The lenders would contribute up to a certain amount, which is seen here. And if I click to the benefits and distributions,
so
you would find
$24,000 every year.
Yes.
And then that's the principal I put in, and that's it. I'm done.
$120,000 in the span of 5 years. You're done contributing to the plan.
So I put in 120.
Correct. And then the next 5 years, the lenders contribute both amounts, yours and theirs. And in the 15th year, the money it's available to you. So because of the leverage, you have an accumulation or internal rate of return of a 9.19%. Between the ages of 65 and 90, you will be able to receive an income stream of $55,000 a year between the ages of 65 and 90, which equates to about 1.4 million tax-free.
Wait, that's how many years? 65 to 90, that's what, 25?
25 years.
And I only put in
25 years.
I only put in 5 years worth of 24 grand.
So for $120,000, you get to enjoy 1.4 million.
I mean,
you
Tax-free.
Tax-free.
I mean, really, I only put in like 3 years, and now I get 25 years out of it.
That's true. And you also have a death benefit of $715 for your beneficiaries. We talk to people
Even after the distributions, correct, Carlos?
even after the distribution's correct. So imagine if you wanted to do something with this money, you wanted to have $120,000, you're going to get a lot more out of it using the Kaizen program because of the leverage. It's tax deferred growth. It's tied to the S&P 500 to an index. It has a zero floor for protection on in the years or the markets might be down. So it has that protection. Some clients come to us and they're like, well, I had opened up a business and it cost me more than $120,000 and we're not doing so well. Well, in this case, you could put in $120,000, what you can afford into it, and you can enjoy the fruits of its labor, not its labor, but its production after a certain amount of time without any moving parts or hassles. So it's pretty unique design. And we really enjoy showing this to our clients for that purpose.
Now, do I have to make like a certain threshold of my income to qualify for something like this?
Yes, typically you would need to have an income exceeding $100,000 a year at a minimum, and it can be unlimited amounts going into this. Actually.
So this could be for medical professionals who bank $100K. This could be for roughnecks that make over $100K. I mean this a lot of people make over $100K, so a lot of people would qualify for this.
And the ages are 18 to 65. The sweet spot that we see the most type of policies being issued right now from the ages of 24 to 55 or even 60. But it can go down to age 18.
If you're 18 making $100,000, you're doing real good.
Yes, and that's another concept we can talk about in a little bit too, or even now we can touch on it.
Sure.
Kaizen has come out with the Great Wealth Transfer, and that allows grandparents and parents, if they had monies that they wanted to gift to their children, we're finding that this product can be a better suitable situation than just giving money to kids and you don't know what they're going to do with it. With this, the parents, if they're making over $300,000, I believe, while currently working, $200,000 while currently working, or if they're retired and they have $3 million in assets or more, they can fund one of these for their children and grandchildren. And the benefits coming out starting at younger ages is much more than what you just ran for the example for yourself.
I've heard about the Great Wealth Transfer, and this is a lot smarter than buying a boat. So
yes,
definitely,
really
this would be
is
a nice option for grandparents to kind of leave with their kids, passing it on.
Absolutely. And it's kind of tied up, too. I mean, if you think about it, because the grandparent or parent will be paying premiums for 5 years, and then that money needs to be sitting in that policy for at least 15 years before the lender has paid back their portion, and they could start taking income out at that point. So, again, rather than giving a gift each year of $25,000, $30,000, or $50,000 or $100,000, they could be putting it into this type of contract, tied up, and it's going to be there for the betterment of the children and even great-grandchildren down the road.
Yes, because a 20-something-year-old with that much money, no, that ain't going to happen.
Right.
It's not a good idea. Yeah.
That's right.
Yeah.
And also, Carlos, we didn't touch on the living benefits, whether that be a chronic illness rider, a terminal illness rider. So if somebody, while they have one of these contracts, is not able to perform 2 out of the 6 activities of daily living, that would be a chronic illness, and they can access the policies prior to for offsetting some of those costs. And a terminal illness would be where someone is expected to pass away within 12 to 24 months. They can also access the death benefit prior to actually passing away to offset costs.
So the list of pros of having this Kaizen program is pretty extensive. There's a lot of pluses, a lot of wonderful benefits that it provides for anybody that signs up for it. the leverage, the matches, the life insurance policy, the cash accumulation, the tax deferral, and the tax-free supplemental income that they can get. Plus, of course, what you're talking about right now, Steve, it's pretty awesome, I think. Very unique program.
Absolutely. And one other thing, too, Carlos, we're seeing a lot of employers use this as a way to bonus to their employees of saying, look, if you stick around with us and we're paying you a bonus now, or we're thinking about paying a bonus, the employer would bonus to the employee, and the employee would turn around and put it into this policy and with Kaizen. And so they're seeing the benefits out of that quite a bit as well.
Excellent.
Are they doing that also with their 401k?
Not necessarily with 401k. It would be separate from 401k planning. Yeah, because this is after-tax money going into life insurance, and that's how it comes out tax-free in later years.
So I don't have to pay tax on this.
Tax-free,
Not
favorable.
when you're taking distributions. You're using after-tax money to pay the premium, but distributions to supplement retirement come out tax-free to you. That is correct.
So let's go over a little bit of history here. Back in the older days, I guess the 1960s is what it was. Clients were using programs similar to this that's called premium financing, and they had to have a net worth of at least $10 million, correct?
Ooh.
That is correct. And it's much more complicated with premium financing because there are collateral that you have to put up, and there could be calls on the contract or additional monies going in that you didn't plan on. So Kaizen has simplified that process with the leverage as well to keep it a simplified program for most people that are out there.
Exactly.
Traditional premium financing does have its place, but this really is more for the current situation that a lot of people are facing. And a lot of people are behind in retirement, and this is allowing them to catch up for the retirement needs. Yes. And you mentioned physicians earlier. It's a slow start for them to get into after they get out of school, number of years in school, and they can use a program like this to help provide that retirement income that they're looking for at that time.
Yes, but what happens when we're younger? We usually spend our money. Sometimes.
How did you spend your money? Oh.
Well,
traveling the world,
and having but I also wanted an outlet where I could invest my money. I just didn't have it. This was not available to me. I'm 46 years old, and this was not available. I don't want to say, it's been a long time since I've been a young person.
And you weren't making $100K.
No, I was close to it though.
Yeah.
But if I had something like an opportunity like Kaizen, I could have come out a lot more ahead because of the time value of money. So I think Steve, you probably would have had it yourself, right?
Absolutely, yes. If I would have been able to see something like this in my days, earlier days, that would have been nice to be able to do.
Right, we would have
and I've
jumped
actually
on it.
shown this to my son when he gets into a point of his working years and has the means to be able to do something like this.
Now, are these sold like individually, or can that be like a joint thing that maybe two incomes can put together on?
It really could be, two incomes paying into it, let's say a husband and wife for a child, or even a married couple. If they so agree to do that, they could both be contributing towards it on one spouse or both.
Okay. So like a married couple, making, 150 or something, they'd pass that bar of the $100,000, and then they can contribute to this.
Correct.
Even for their kids? Wow, that's even better.
Well, that's kind of like a joint account. You could have a joint
account.
One person has to make at least $100,000. The other one might be not that
50
criteria, 50 or something like that, and then they can both contribute to it. Obviously, the other thing to look at is the age of the spouse. The younger one's probably the better one to use, but it depends on how much their income is.
It's true. Yeah.
The time value of money. They have longer to accumulate. Mm-hmm. And we use examples. If I put the 42-year-old here for David, but based on the same math of $24,000 into a year for a 32-year-old or a 30-year-old or a 25-year-old, the payout's a lot more. It's pretty substantial. Because
I've seen some payouts projected for a 25-year-old being $155,000 a year.
Tax-free.
Not much going into it.
Right.
A year tax-free, correct.
So this program makes millionaires. Like even me, I'm in my 40s, and it showed me I was going to get like 1.3. I mean, I don't hear anything like that.
For 125,000.
Yeah,
correct.
that's a damn good bet.
And that's what I was going back to. People sometimes they want to take loans out and they want to open a business, and it's a tough world out there. And then this way, if you funnel that money into a life insurance policy, it's tax favorable. You can wait 15 years and not have all the moving parts of a business and all the headaches that might ensue. You can just put into a Kaizen program and wait 15 years and continue working your job, and then you can have something like this that's gonna be easy.
Yeah, the older I get, those decades, they just keep going. They're flying.
Time flies.
15 years is nothing.
And we've talked about utilizing Kaizen for maximizing distributions. There is a flip side of the coin. If somebody wanted to use it to maximize face amount, that is a possibility. So if somebody has a very large life insurance need, you could use that same leveraging to buy more life insurance on yourself than you could if you just used a standard product. So it can solve two different solutions, really.
Well, Steve, also in the example that we provided with David here, the 42-year-old, $24,000 premium per year for 5 years. What if the person's 25 years old and says, "I don't want to wait till I'm 65"? What are their options?
They could actually take distributions really anytime after that
15 years.
Bank loan is paid back. So it could be within 15 years that they could start taking distributions. And again, unlike a 401k, there's no 10% penalty for early distributions prior to age 59 and a half. So they could access this tax-free without penalty prior to 59 and a half, not waiting to age 65.
So they can enjoy their retirement a lot sooner.
They retire early.
Yeah.
Correct.
That's beautiful.
I could retire early. What am I doing here? So, Steve, anything else you want to mention? Anything we forgot about?
I don't think that. I think we covered quite a bit, and I would say that Carlos has an agent link that he can provide that makes it really simple for people that are interested, and they can look at this themselves. And so if you're interested in that, you can reach out to Carlos. He can email you a link, or he can meet with you one-on-one, but you can estimate your own benefits, and it allows people to even start the application process through that link itself.
And they can play with the little sliders and numbers and the little piggies?
Correct. Yes, they can.
Exactly.
Okay.
Exactly. And there's an agent link coming out in the very near future, within the next month, I would say, for the great wealth transfer concept. And again, that is a way for people that have an interest. It's easy to just sit down on your computer, take a look at it. You can understand it from beginning to end, and even start the application process. But it's a great new feature, and it's making it a lot easier to get the message across from Carlos to people that are interested in this.
Steve, thank you. You explained a lot here. I didn't know anything about IULs coming in here, especially with this Kaizen add-on. It sounds like a winner. I can't wait to get started with something like this and spread the word.
Very good. Thank you, too, for inviting me to join you today.
Thank you, Steve, and thank you, David, for today's podcast. And if you have any questions or concerns, give me a call. My number is 956-994-0407, and I'd like to have a conversation with you regarding the Kaizen program.
Thank you, gentlemen.
All right, Steve, take it easy.
Thanks, Steve.
You bet. Bye.
Bye.
Wow, man, that was awesome. Glad we can have Steve on the call here. I didn't know that type of products existed. That you can make $1 million out of just a small investment compared to the million.
Yeah.
Just putting in that much just for only 5 years. That's awesome. I wish more people knew about this. especially we're here in South Texas. So, I mean, $1 million really stretches out here. You know, if you retire with $1 million, you are set. You're good to go. You're golden.
And one other thing, I mean, it's a tax favorable life insurance policy that utilizes IRS tax code 7702. So that basically makes it a tax deferred and tax favorable in the sense that it's tax free when you get these distributions. But we all know, taxes are probably going to go up in the future. So it makes sense to have something besides a 401k or a TSP, 457 plan, anything. Most of these different pensions and such are designed to be taxed, and the Kaizen is a solution to that for the future.
I think this is a winner. I'd rather pull out my money elsewhere and put it in something like this, because this makes sense in the long term. If you're thinking long term, you're thinking about your retirement, this is definitely the way to go.
Exactly, David.
All right, man. That's it for us. We're M.A.H Financial. Next week, next podcast should be Mark Hernandez back in the studio, and he'll bring his guest.
Thank you for listening to Retire Rich, Tales of Financial Freedom. Have questions about topics covered during the show? Visit our website at www.mahfinancial.biz or give us a call at 956-994-0407. Don't forget to click the follow button to be notified when new episodes become available. Investment advisory services and financial planning services are offered through Simplicity Wealth, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm, nor does it indicate that the advisor has attained a particular level of skill or ability. Insurance, consulting, and education services offered through M.A.H Financial. M.A.H Financial is an unaffiliated entity from Simplicity Wealth. Clicking the like button does not constitute a testimonial for or an endorsement of our investment advisory firm, any associated person, or our services. Clicking the like button is merely a mechanism to circulate our page. Like is not meant in the traditional sense. In addition, postings to our page must refrain from recommending us or providing testimonials for our investment advisory firm. Because the SEC and state securities regulators generally prohibit testimonials, any such postings are subject to swift removal.